I'm talking with Francis Fraser today, Regional Director of PlaNet Finance. Welcome, Francis. You were recently asked to chair the Development Committee of the MFSA Board. Who forms part of the committee and what is the purpose of the Development Committee?
The board have been focusing a lot on current issues that are playing out in the industry, like the legislation changes, affordability issues. And we wanted to make sure that in the face of all of those current issues, we weren't forgetting about looking to the future and looking at the strategy around where the industry is moving, and also looking at how we can proactively influence where membership is actually going in the market. Particularly because at the moment there are a lot of questions about the sustainability of the industry, and we want to make sure that as a board we're focusing around that future, a sustainable future. And so that's really the purpose of the Development Committee. The people that make up the committee are primarily board members, so Israel Noko, you'll know, and Christine Fritz from Banksita. We also have a number of co-opted members on the committee: Rudolf Willemse from Old Mutual, Kesia Rust from the Centre for Affordable Housing Finance, she's a housing finance expert, and then Kolofelo Shai from NPI Consulting, and then of course yourself and Henny from MFSA.
What do you mean by development finance?
Development finance is actually an interesting general term that we use. It's not necessarily strictly related to developmental credit like in the National Credit Act. I think we've been using the term fairly loosely in terms of looking at new opportunities in the market, opportunities for new products, opportunities for new clients. Some of those could be small enterprises or micro enterprises that don't currently have access to credit. At this stage, only 9% of small and micro enterprises have access to credit in South Africa, so there's a huge opportunity there. There's also the housing finance space where there's a huge need for affordable housing in the market, and with that comes a need for financing the building of those homes. And there's other opportunities as well that we perhaps haven't articulated as much in our discussions to date, like agricultural finance, and that could be an area of interest if people have knowledge or specialized knowledge in agriculture. So it's really looking for new opportunities in the market where people can come up with new products and really take opportunities around the market.
Why do you think that MFSA members should be focusing on development finance?
I think we're at a stage in the industry where there's some sustainability questions. Can we continue doing what we're doing in the market and not look to some change? And part of that is looking at, for example, topics like consumer education. In the NISC committee that I form part of as an MFSA board member, there is a working group around consumer financial education. And one of the topics there is how do we actually educate clients about responsible use of credit and also their obligations in terms of being responsible consumers. How do they manage their debt better? So that's one of the topics that we'll also look at as the development committee to make sure that we can easily provide those kind of services to members. And part of this is also about managing some of the perceptions that are out there in the industry about the microfinance sector. So part of the reason why I think we need to do this is to really live up to our slogan of being the voice of reputable microfinanciers. We want to be the reputable microfinanciers, and if we're focusing on other markets where we're actually contributing to the socio-economic development of the country, but at the same time on a commercial basis, then I think it can go a long way to changing the perceptions about the microfinance sector in South Africa. There are also a lot of opportunities in the sector that we need to look for, and there are already members that are doing that are going into new markets. And I think the challenge to everyone is let's do that. Let's not focus only on the challenges in the industry, because that's the temptation when things are not going easily. It's to look for the new opportunities that are out there. And the good thing is that they are commercial opportunities. If you look at microcred in Madagascar, they're quite a new microfinance institution that only focuses on the enterprise markets, and they broke even in a year and a half, which is very good. Most enterprise lending institutions probably take more like 3 to 4 years to break even if they really know what they're doing. And they have an average loan of I think $1,300, and their return on equity is almost 30%. So you really can do this on a commercial basis. You just have to get the model right and understand the market very well. And that's why MFSA is focusing on this, is to see how we can reduce the school fees that each member has to pay so that we can learn together as members of the association.
What are some of the critical success factors to making development finance work in South Africa?
I think one of the key things is around skills development. There are particular skills that you need when you're lending to enterprises, for example, or even in the housing finance space, because it's a different model. Those skills and experience don't necessarily exist there in the staff and the management that you currently have. So we need to build those, and I think what's very exciting in terms of that is the role that Bankseat is playing in terms of supporting that skills development process. One of the projects that we're focusing on as part of the board is a training needs assessment in the sector to understand what those skills are that already exist, what kind of training is available and what the gaps are, and to basically come up with a way in which we can address some of those skills challenges that are out there. It's a very labour intensive credit process when you go and assess an enterprise, so we need to make sure that we've got good people who are not too expensive for the business and who we can retain in the business rather than losing them, because those skills are so valuable. Once you've trained somebody, there's the temptation that they can join another organisation. The second critical success factor is probably around the credit model and getting the credit model right, which involves making sure that you're getting good loans on the books in the first place, because it's much harder to collect on a non-salaried person. So the decision has to be even more accurate and conservative than it might be in the consumer lending space. And then the collections are also slightly different, where you have very swift follow-up that escalates very quickly, which is a bit different to the consumer lending model. And those are some of the nuances that need to be well understood so that you don't take a long time to pick up on those approaches, but rather learn from some of the best practice that's out there internationally on how to actually do enterprise lending and housing finance. Same, there's similar specific methodological things that you can do to get that right quickly.
What are some of the projects that the committee is focusing on?
Aside from the one that I already mentioned, I think an important one is around raising wholesale finance or investment finance to go into this area. And we're working with Israel particularly around how we could utilize the Black Economic Empowerment legislation as an opportunity to raise enterprise development funding for the industry. The intention is to potentially set up a fund that could be accessed by MFSA members for on-lending capital in this area. So it's quite an exciting opportunity that we're working on. It's early days, but something that's a strong focus for us. And then we're also looking at how we can support capacity building and training. So I've spoken a lot about how we can reduce the cost of learning new credit models. We're wanting to bring in training, capacity building, consulting services that can help MFSA members to go through that learning journey a bit faster. And to do that, we obviously need some external funding to support that. So we've done quite a bit of fundraising through the EU, through a number of other partners that we can work with to fund some of those opportunities. And then the last project we've been working on, which is also quite exciting, is within the Southern Africa Development Community, SADC. It's called the Southern Africa Microfinance Project, or SAMP. And there's two key focus areas on SAMP. The first is around raising investment, and it focuses again on what I was talking about earlier about having available investment for these new business models. And the second is to look at the regulatory environment within the SADC region to see, are there conducive microfinance policies in place? Do governments enable the environment through suitable policy and legislation and regulation? And we're using the CGAP guidelines, it's a World Bank guideline around conducive microfinance policy, and we're going to do some assessments in some countries to see how they match up against the guidelines, and if they don't, why not? What are the reasons for that? Ultimately, we want to try and influence the policy environment to make sure that at that level there is the right support for the sector.
Why do you think that MFSA members can make a success where others have failed?
I believe that the MFSA members have a very interesting profile, which would make them good at going into the sector. The first thing is that we're commercial. We focused on the bottom line, and I think that drives the right performance. The second thing is I think that we're very agile in terms of how we go about our business. So we're not bound by very strict credit policies and rules. If something's not working on the ground, I think there'll be a change. There's the ability to adapt and change the model and the policies quickly. And that's in comparison to, example, a big commercial bank where those kind of changes would take some time. And when you're learning these things on the ground, you need to be able to be agile and to change quite quickly. And then I think the third area is that operationally, we lean and mean. You know, we don't have huge costs that can't be carried by a microfinance model. We've been operating in an environment with fixed pricing for a long time, so we're very aware of the costs and the expenses, and with that is really critical in the development finance space as well. There's not huge margins and a huge cushion there, so you have to be very cost effective in what you're doing. So all of those elements for me make MFSA membership a good potential base of businessmen and women who can actually drive the industry into a new area.
Any closing remarks from your side, Francis?
I think there's a great opportunity for our membership to go into this area, and it is a commercial opportunity. It's not just an opportunity to have social impact. That opportunity to make the money exists, and I think we're well positioned to do that as the membership of MFSA because of the nature of our business, the experiences we've had, the fact that we innovate, that we're agile, that we understand credit. Those are all reasons why the membership can go into this. And I think the board of MFSA is really focused on how we can support that move and that shift and change, and to enable you out there in terms of actually making that move. So good luck.
Thank you so much for joining us, Francis, and thank you for sharing the initiatives that the committee is focusing on.